I will delve right now into the second segment of the interview segment on the show as we focus on the currency market. The Naira on Friday remained constant, exchanging at 428 Naira 12 kobo to the dollar at investors and exporters window. The local currency remained unchanged at 428 point, that's 12 kobo to 428 Naira 12 kobo to the dollar, same as the 428 Naira 12 kobo it traded on Thursday as well. A total of $71.92 million was exchanged in the foreign exchange space at the official investors and exporters window as at Friday. The selling rate of the dollar to the naira at the black market rate today is 642 naira to the dollar, and a buying rate of 630 naira per dollar, generating reaction. The Nigerian Employers Consultative Association has said allocation of available Forex to manufacturers and other productive sectors of the economy should be given priority as Forex scarcity persists, calling for a holistic and multi-pronged approach towards resolving the challenges faced by the nation. Well, joining me again via Zoom to understand the trading pattern, of course, and the lingering Forex scarcity, I have Mr. Kenneth Rikume. He's a partner, tax reporting and strategy, PricewaterhouseCoopers. Good afternoon, and thank you so much. Mr. Kenneth, it's good to see you.
Good afternoon, Tolu, and thanks for having me on your show.
Thank you so much. We're always happy to have you two join us. But let me start this way. I'm going to ask it. Yeah. Luckily, I'm the one doing the questioning here. Do you think the Naira is appropriately priced at the moment?
So it depends on the market which you're looking at. So we have an interesting situation in the country where we have, several windows for exchange of Naira. So we have the official market and several windows within, a few windows within that official market. And then we have the parallel market, which, previously we used to call the black market, but because of the branding of that market and the fact that it wasn't exactly supported by the banks and the central bank, it's now called, the parallel market. So, if you're looking at the parallel market, then I would say that, foreign currency is properly priced because there are no interventions, there are no restrictions on the pricing. It's purely driven by demand and supply. And to be honest, the official windows were at a time, in my view, also reflective of the right pricing of the market. Unfortunately, what we find ourselves in today is a different situation from what we saw when the price of crude oil was above $100 per barrel, where the FX liquidity in the market increased significantly. Today, we don't have that same balance because what we have is a situation where essentially a lot of the crude oil that is being produced do not necessarily translate into FX revenue for Nigeria because of crude oil theft. So, the market, even though, there is a pricing for it, the appetite for importers and people who need FX, is higher than before because the FX liquidity to meet up with the demand is not sufficient. So what you then see, and this is the reality when you engage with manufacturers, is a situation where the market, which is the I&E, has a price, but the central bank also needs to incentivize the exporters to make that pricing possible. So with the RT200, the central bank is able to give up to 65 Naira a US dollar that is repatriated back into Nigeria as part of, export proceeds, which is coming through the NXP. So there is an incentive which the exporters get, which is an additional 65 Naira, in addition to the amount which they exchange on the window. But you would also appreciate that, many of the importers or the people who require, dollars through the official channel do not get their fair share of, US dollar allocations. So they tend to open multiple, accounts with several banks and explore several banking relationships to get more allocations. And another thing that happens in the market, which people tend to avoid talking about, is the fact that in order to get alignment with the exporters to ensure that the dollars are allocated to them, many players then tend to incentivize even further. Apart from the RT200, they privately have to incentivize the exporters to allocate, the dollars to them. So these are some of the challenges, and why, as at today, the I&E is not necessarily a reflection of the pricing or of the dollar today.
Now, on a lighter note, I saw something online where someone wrote and pasted and said, I have a dollar and I'd like to change at the I&E window rate. That's for 420 Naira, maybe approximately. I said, I'm a good Nigerian. I'm not going to change it from the black market. But how patriotic would you say many of us would be to actually leave that space and go into the banks and get that I&E rate when you know that you can always get it on the higher side? That's on one side. But my question really is that all of the efforts and initiatives by the CBN, do you think we are actually getting positives, any positive results from all of this? Like you mentioned, RT200 initiative. There was time we had the Naira for dollar initiative. We stopped giving FX to the black market of the BDC operators. We've gone on and on to restrict FX for some, maybe some things we can produce in country. All of this is aimed at addressing this FX issue. Would you say we are making a positive mark in all of this?
Yes, thanks, Tolu. That's an interesting question. They always say that it's easy to analyze. It's much more difficult when you're on the hot seat. True. So, to be fair to the central bank, they've essentially explored and used everything within their within the textbook, right, to try and curb or deal with this issue. And some of the initiatives they've come up with, the Naira for dollar, the expansion of trying to diversify our FX earnings by incentivizing exports, and as well as the within the RT200 and all the initiatives in there. I believe they have tried a lot, and much more recently they sort of they banned the BDCs to squeeze that market, and about a few weeks ago they also at least the EFCC and not the central bank carried out some reviews or investigation of BDC hubs across the country. Now, unfortunately, sometimes when those sort of adverse initiatives are taken, it has a ripple effect on the market as well. People forget that FX is like every other market, the equities markets, the money markets. It responds to comms or communication by critical stakeholders. It also responds to events by critical stakeholders. So, when some of these investigations were happening, we discovered, this was when, there was a material squeeze, and, in the parallel market, the price of a dollar went above 700 Naira per dollar. And then it reverted back. But you see, some of these initiatives, they tend to cause some effect in the market, but eventually they stabilize. So, I mean, to be fair to the central bank, they've tried some good initiatives. They come up with some good initiatives, but the reality is that, when there is demand for a particular item, a good, a resource, or a commodity, and that demand is not being fulfilled by supply, the price will always go up. Now, you can have a regulator that sits in there and insists, that the pricing must be at a particular level, but that level may not be what the market is demanding. And so that is the situation that I think the regulators find themselves, that at the parallel market, if an exporter, and mind you, an exporter is not supposed to do this, but if an exporter earns FX, and earns that FX is gold in the hands of the exporter, because if they take it to the parallel market, they'll be getting way more than they will get from the I&E. So there is an incentive in there for the exporter to try to explore that other market. And when you have that sort of incentive, there is only so much you can do as a regulator, but you can just try to stem the tide. But at the end of the day, people will act from a perspective of optimizing what their profits will be at the end of the day. So I wouldn't say the central bank hasn't tried. I would just say that the reality today is that the market demands for more in terms of the price of a dollar. The only way to reverse the trajectory of things is to deal with the issue of the gap between, I'm talking about short term. If you want to turn the tide today and deal with this issue of FX, and you saw the communication coming from the central bank recently around the fact that remittances from the oil and gas industry has not been at an optimal level. You need to deal with the issue of crude oil theft, so that you're essentially optimizing this current situation where the price of crude oil is significantly higher than $100 per barrel. And you can see the effect is not just on the exchange rate. You can also see the effect on the excess crude account as well, because normally in this sort of situation where there's high production, where the price of crude is high, then the ECA is supposed to be increasing, but we've seen significant depletions, albeit not in relation to foreign currency, in relation to other expenditure, but at this moment, some of the opportunities which we could have optimized as a country, and it's not that anybody prayed for it, it just happened, and it was opportunistic. It happened, we're supposed to benefit from it, but it's not working for us. For other countries that have been able to maintain their levels of production, I think they're smiling to the bank at this time. So these are issues that are outside the control of the central bank. And I think, it requires all ministries, departments, and agencies, as well as the security operatives, to, see what we can do to ensure that we optimize, this resource that we have. Further from that, we now need to look at the medium and to long term. What are we going to do? Because we can't continue to rely on crude oil because it's so uncertain.
Exactly. We have to start taking advantage of the non-oil sector. to generate effects, of course, for our country. But let's wrap up on this note. How does this kind of development, how does it affect the commercial viability of a country like Nigeria when people are scared of how they could repatriate funds to their country?
So of course, you know that one of the things that makes a country attractive is the ability of the investor when they bring their funds in to be able to repatriate the profits they make. The ability when they bring in expatriates into the country, the ease at which they're able to convert and make remittances to their home country. So, the color of things at the moment is that it would impact on, foreign direct investment. And that's the reality, because the investors look at the uncertainty in the market and they are unable to get comfort that, few years down the line, they'll be able to benefit from their investment. So I think it's, that's the sort of adverse effect it could have from an investment perspective. So I think, from that perspective, it could be adverse. However, there are other things that we could use to make ourselves attractive. One of it is we've got a formidable market, a strong market. So the players who are already in here are still looking for how to backward integrate with so manufacturers and producers, especially the multinationals, are still looking for opportunities to backward integrate to ensure that they have a home for the raw materials which they're importing to manufacture and produce products both for the domestic market and the West African market. We're the biggest market in West Africa, so I think we need to play to that advantage and ensure that those who are already here, especially the multinationals, are able to see that opportunity, especially with regards to integrating with, their, the sources of their raw materials and ensure that it gets into the country. I've worked with a few companies looking at such opportunities. But the issue that they always land up is, if we make this investment into plant, equipment, into a factory in Nigeria, what comfort do we have that in the next 5 years, 7 years, when the investment begins to produce, we'll be able to take our profit out? So that's the, I think it's obvious to everybody that that's something that the government needs to deal with.
Interesting conversation with you as usual. I've been speaking to Mr. Kenneth Orikume. He's a partner at tax reporting and strategy at PricewaterhouseCoopers. Do enjoy the rest of your day and thank you for joining us on Business Nigeria.
Thank you, Tolu. It was a pleasure.